What's up guys, this is Deepak Bangar from Profitable Traders, and in this video we are going to see, is stock market a zero sum game? Is investing or trading in the stock market a zero sum game after all? For many years I had this notion in my mind that my profit in the stock market, trading or investing, is coming at the cost or the loss of someone else's money. And this was a major roadblock for my success in my trading career, because I used to feel that guilt inside my mind that my profit is coming because someone else is losing the money. And until a point when I actually got this clarified, and from that moment onwards many things changed for me completely. So let's get started. If you are new on this channel, do not forget to hit the subscribe button to get the latest notifications about the right and quality stock market education that actually works in the real market to become a consistently profitable trader. Let's first understand about what this zero sum game is all about. A zero sum game is a game where one participant's winning is coming at the cost of the other participants losing. That means one person wins when the other person loses. Example we will take of a coin toss game. Let's say one person is calling a head and the other person is calling a tail, and when a coin toss is made, there is only one possibility, there is only one winner is going to be there. So if it comes the head, then the person who called head is a winner and the person who called tail is a loser. So A is winning at the cost of B, which is losing. Another example could be the casino, where the casino and the players, they are playing. Let's take an example of a poker game. Let's say there are 4 players, player A, B, C and D. Each of them, they are putting $100 each on the poker game, that hand. And ultimately, let's say one person, that is, let's say a player B, he wins the game or he wins that hand of poker. So what happens is, the total money which is accumulated and it at stake in that particular hand is $400 from the 4 players, $100 each. And if the player B is winning, that means he gets the $400. Now player A, player C and player D will lose $100 each, and the player B will gain $300. So this is how the player B's winning or the profit is coming at the cost of player A, C and D loss. This is a zero sum game. Now apparently it does appear that, logically it does appear that the stock market trading or investing is a zero sum game. And why I am saying that? This is also the understanding of most of the people out there, and there is a reason behind it. See, in trading or investing, there is always a buyer and a seller. Buyer buys a stock because he thinks the price will go up. The seller sells a stock because he thinks that the price will go down. And they both come together to make a transaction that is called as a trade. There can be only one person right, okay, either buyer or the seller. And it does seem that if a buyer is right, then seller has to lose money. If a seller is right, then the buyer has to lose money, because only one person can be right. But is this true? Is this a zero sum game? Let's find out. Let's take an example of Reliance share. Let's say Reliance, a person A is buying the Reliance shares at the cost when they were trading at around 500 rupees. And he holds the shares for some time, and afterwards the Reliance price of the Reliance share increases to 600, 700, it goes to 800, and then what this person A decides is to sell the shares to a person B. So person B buys the shares from person A at the cost of 800 rupees. Now he holds these shares, and afterwards, after a few months, when the price of Reliance shares goes up to 1000 rupees, this person B sells the Reliance shares to person C at 1000 rupees. Now in this process, person A made the profit, person B made the profit, person C has holded the shares. So in this process, was there anyone who actually made the loss? Did person A's profit come at the cost of loss of person B? Did person B's profit come at the cost of person C loss? No, right? So actually, what most of the people they tend to think is, when it comes to share market, they treat it as similar to gambling or coin toss, where they tend to think that if one person is making profit, the other person is actually making a loss. But that is not necessarily true. How actually the share price increases or the decreases? See, whenever a company is making the products or the services which are of value to the customers in real time, in the real market scenario, then the company is making profit after selling of goods and the services. This is how the profit is made, and the profit made is reflected in the share price. So if a Reliance share is increasing its price from 500 rupees to 800 rupees to 1000 rupees, that means that there is actual goods and sales turnover is happening, a business is happening, and the company is making profits, and that's why the price of the share is increasing. So if a person is holding the shares and he is selling the shares at a higher cost, this is not coming at the cost of the other person's loss. I hope you are trying to get my point of what I am trying to say here. The analogy of a coin toss or analogy of a casino or gambling is not applicable with respect to the stock market, investing or trading, when it comes to the cash market or the equity market. And hence I personally believe that stock market trading or investing is not a zero-sum game at all, because a person's profit is not coming at the loss of other person. It is coming because the company is making profits from the sale of actual goods and services that is reflected in the share price of a company. Yes, there is one scenario where in some situations there could be stock market speculative type of trading or the gambling type of trading. That can be one scenario where it can be a zero-sum game, but this is beyond the scope of the discussion of this video. I'll be covering this in more detail when I make the futures and options or the derivative markets video. I hope you found this information useful, and from today onwards you will not feel that guilt of you making money from the stock market at the cost of someone else's loss. This is not necessarily true. Stock market is not a zero-sum game. And if you liked what I shared, please do not forget to hit that like button, subscribe to our channel, and share this information with your friends whom you think they can get the benefit from clarifying this concept. And let me know in the comments below, what do you think about this concept of zero-sum game. I thank you for your time, and I'll see you in the next video.